Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. Happy Hump Day. Man, a lot has happened in the 24 hours. Well, really 23 hours since we got off the air yesterday. We've had another very technical move in gold, very similar to what happened last week when I told you to jump all over it. Lower, that's the best part, right? We had another gap in the chart. We call it when the markets gap up, they got to fill the gap. It filled the gap today, so be ready for that. Having said that, we got a rally on Wall Street. Why? Two big things. Yesterday, the Treasury Secretary, Scott Bessent, came out and said, hey, we're going to get this worked out with China. And everyone, hey, that's a good thing. Now, unfortunately, I don't think the speed that Trump and Bessent are talking about is what Wall Street will want, but nonetheless positive. Then, after the markets closed yesterday, so the markets were up nice yesterday, up nice again today, because Donald Trump said, hey, I'm not going to fire Jay Powell. Probably couldn't fire him anyway, but very positive things. And this seems to be the pattern, right, where Wall Street's right on the prep, right? Because remember, Wall Street's all the way back out again, and then all of a sudden we start saying nice stuff. It rises back again, and then something happens, and then we say not so nice stuff. But we'll see. The Treasury Secretary is talking as we speak at the some globalist event. The big headline, America First, doesn't mean America alone. We'll get into this and everything else that has happened, but our toll-free number, 800-951-0592, the website at allamericangold.com. I made a math error yesterday. I don't make a lot of them, but I did, so I've got an update on those platinum credit cards. They're going to be a little less. The ones I bought yesterday, we reached out, we fixed it. But we're going to have that. We're going to have a gold special. We have a rally in silver, platinum, palladium, right? All the I guess copper, right? These metals that say, hey, maybe we won't have a slowdown if we can get this to some sort of a deal. But according to the Treasury Secretary, here's what he is saying. The United States is going to demand that the management, and he's talking about the IMF and the World Bank, and the staff of these institutions being accountable for demonstrating real progress. What does that mean? Well, one thing is they want the IMF and the World Bank to stop lending to China, saying, hey, listen, you're supposed to lend to, I guess, I don't know, what I call it, emerging markets, poor countries, stop lending to China. That's essentially the message. That was a nice way of saying it. And you know what? I'll say this, Jason. I don't think he's wrong about that, right? China's got the second largest economy in the world in dollar terms. They consume a ton of stuff. And I don't, whatever. If the IMF and the World Bank are supposed to lend to these poorer countries, then I would say that would be an accurate statement.
I think so. Yeah, and a little off what you're coming into, but I wanted to say something about Joe said, Joe being off on the price, right? This is why you listen to the show is what's gone on the last couple of days. This is precisely, Joe did a really good job. We got this platinum that we've been selling. We didn't push the gold really hard. We got more. We want to finish selling this platinum because this is a great place to be buying it. Platinum is going to go up sometime, but is it a year? Is it next week? We don't know, but it will catch up. So this is a great place to be buying platinum. We're going to finish selling this platinum. But we had you guys buying platinum the last couple of days and today, and gold's been dropping. Perfect timing. We could have put you into gold. We put you into platinum. Platinum actually went up a little bit today, so you're ahead by listening to the show. And now if we get you back into gold, maybe tomorrow and Friday, or maybe a little bit today, you're doing really well. So once again, this is why you listen to these shows. You know, we have the repeat show in Colorado now at 3 o'clock, so you got a second chance to catch this, because I know for years and years people used to listen to that repeat show before Brian and I came on 7 years ago. And now you got that second shot to listen in and order. But, Joe, I just wanted to say I think it's great that we were selling platinum when gold was dropping the last 2 days. It's a great way to go. Now gold's going to be another buying opportunity, because I don't think gold's going to drop a whole lot more. I mean, I don't know what you think. Could drop some more.
Yeah, it could. I actually think we're going to see another rally. This was something, and again, this is very, when I say technical, this is all computer. So yesterday hit 3,500 overnight in Asia. And then they started taking some profits. And at that point, I was hoping, because I had said it to Jason yesterday. We had that debate. I said, no. It's got to go below 32.80. That was the number that I gave to Jason yesterday. And once it does that, then the gap will be filled again. So we've been gapping higher in Asia. Like we close in New York at 32.80. And then by the time it opens back in New York the next day, gold's $3,400. Well, there's a gap. That gap's gotten filled. Now I'm telling you, not only buy this platinum, get gold while it's on sale. We'll be back after the break. 800-951-0592. Before we get into the heart of what the Treasury Secretary is saying today, let's look at the markets here. The Dow's up 900, just above 40,000. So this kind of seems to be the pattern, right? We dip below 38,000. Okay, everybody's saying nice stuff now, and then we raise back up, and then, I don't know, nice stuff doesn't happen, but we'll take it. The S&P's up 150. The NASDAQ's up 600. The 10-year note, see, it's kind of a weird thing, right? Came down a little bit. I mean, still at 434, but, yesterday we were 4 and change. So the 10-year note came down a little bit. Oil came down a little bit. Gold, as we talked about, listen, gold's down $90. But again, it's a really good $90, $100. This is what we need. Gold bottomed out $32.60. Like I said, I needed to see at least $32.80. Right now, it is down now 100 at $32.80. Now, on the other side, the industrial metals. Silver's up almost $1. 33, been as high as 33.50, 33.60. Platinum up 20. A pretty good deal, huh? 976. Palladium, rhodium up as well. So it's kind of one of those weird little market deals where everyone's happy because, okay, well, maybe we can get some kind of a deal and maybe things won't be so bad. The Treasury Secretary did say, hey, there's an opportunity for a big deal on trade with China. However, and this is weird. This is the thing that I don't get. So go back 30 years ago. And they told us, we don't want these jobs. And let's face it, I mean, manufacturing jobs are kind of dirty jobs anyway, and a lot of them were never going to come back here. Like, we're not going to sew sweatpants and socks and all that stuff, but some of it, we could have held on to. But they said, we don't want that. And, of course, what was the trade on this? We could print more money and not create inflation. That was really the trade. By having China and other countries make things for less. And, of course, what are we? We are the great consumer, right? It was one of those times where it was a good trick. It really was. I mean, think about it. They got an extra 20 years of deficits when saying, see, there's no inflation. However, fast forward to today. Bassett blamed the persistent U.S. trade deficits. Now, let me be clear. We have not run a trade surplus since 1972. Right after Nixon closed the gold window, boom, all trade surpluses gone. Now, obviously, it gets worse every year. Now, what is a trade deficit? What is the impact? All of that is simply money leaving here and going somewhere else, right? That's what it is. And, of course, China gets the lion's share of that. He blamed foreign policy decisions that promoted excess savings and low wages abroad. Kind of interesting, his wording here, because he does two things. Number one, he says, hey, man, we probably made some stupid trade agreements. That's how I read it, right? The foreign policy decisions. But then excess savings and low wages abroad. Saying, well, gosh, China, why are your citizens saving money? That's a bad idea, and pay them more and have them spend. They need to be more like us. That's what he's saying. The architects of Bretton Woods. So remember Bretton Woods, for those of you that don't know what Bretton Woods is. That was the price the Allies in the world paid to the United States for winning World War II. What was it? Really simply put, you had to buy everything in dollars, period. Everything was priced in dollars, and you had to, and what I mean by everything, that doesn't mean the Germans were using dollars. What it meant was if you were going to buy oil, if you were going to buy soybeans, if you were going to buy, I don't know what, gasoline or whatever, all those commodities, copper, aluminum, steel, it was priced in dollars and had to be bought in dollars. Of course, what did that get you? Well, now they want to having them hold U.S. debt, right? That was a great thing. Why? Well, because you needed it to buy stuff. Now, we don't have that anymore. Bretton Woods is over, right? Everyone is, and we're seeing this happen. But here's what he says. The architects of Bretton Woods recognize that a global economy requires global coordination. Well, who's the architect of Bretton Woods? Us and the bankers, right? I mean, right, Jason? I mean, that's who the architects were. But what is he saying? Hey, we need global coordination and key reforms to ensure the Bretton Woods institutions are serving their stakeholders and not the other way around. Interesting comments. Was this Bassett taking a shot at the banks? Or is this taking a shot at China, right? Kind of a little bit of both, right? Saying, hey, wait a minute. You guys are being too nice to the Chinese, and we're Bretton Woods, right? We need to be the one making these decisions.
Yes, very much wanting a bigger piece of the pie, because they're all in the same place, right, Joe? They're all in the same system. And so it's great. It's funny when the finger pointing happens, right? Hey, I want this,
right.
and you need to stop that. And General Powell, I need to fire him. And well, you know what? Maybe we don't need to fire him. And it's how that system works, Joe. It's you got to flex your muscles if you want a bigger piece of the pie. That's exactly what you're talking about. The guy's like, hey, I'm gonna say some critical things about others because I want more. This is my position. My position doesn't have a big enough piece, and so you'll see that from time to time, Joe. But you are right, Bretton Woods. That wasn't even the U.S. I don't consider the Bretton Woods the U.S. government. That was the banks. It was the Bank of England. The Bank of England didn't care that the pound wasn't the world reserve currency. They got bombed like crazy, like the rest of Europe, and they just moved it over. Just move it over to this place over here in the United States, and when it doesn't need to be here anymore, they'll move it on somewhere else, and it'll be a new meeting, right? It'll be an anti-BRICS meeting or something, right? It'll be something like that's going to come in the future.
Here's what's interesting about the rest of his comments here. We are telling the Chinese, hey, this is who we want you to be. Right? And this is typical of the United States in saying, hey, we want to be, we tell the world what to do, right? So here, what is it that they want the Chinese to do? Because that's the hard part I'm having trying to figure this out, right? China didn't do any of this. I'll be honest with you. Right? The banks did it. Our foreign policy decisions did it, right? NAFTA, GATT, free trade, right? All this stuff. And let's face it, we wanted to print more money. And we wanted to pretend that you could print money and not create inflation, which it did for a little bit. But here's what he says. China is in need of rebalancing. Rebalancing for what? Recent data shows the Chinese economy tilting even further away from consumption and towards manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with trading partners if the status quo is allowed to continue. So the Treasury Secretary is saying, hey, stop making stuff, right, that the rest of the world wants, right? Stop doing it. I don't know how that gets done, Jason, right? I mean, it really is a head-scratcher. Their current economic model is built on exporting its way out of economic troubles. Oh, so our way's better, right? Well, how do we get out of our economic trouble? We like to print our way out. Apparently, according to the Treasury Secretary, the Chinese like to export their way out.
Well, I memean, if people want your currency, then you can print your way out. And there's been many ways to force that urgency. And I think what we're seeing, Joe, and what's the last couple of years since the COVID emergency is it's getting harder and harder to entice other entities to get full on the currency, Joe. And here's the thing. Inflation makes all currencies, since we have a fiat currency worldwide, it makes the currency very, very weak all around. These currencies play together. They're called different names, but in a lot of ways, Joe, they're kind of all playing in the same sandbox. So if there's a flight away from currency, even if it's not the dollar, just trying to get away from currencies, then China wanting to export their way out of their problems, well, they suspect that people need the goods more than they need the currencies, right? The funny thing is you need both of these things. For this thing to work worldwide, you need people to trade the currencies and export the stuff, right, Joe? They'll self-implode together, Joe.
Yeah.
China said it best. They said, look, if there's a trade war, it's going to hurt everyone. And so it's once again, it's the gambling table. Everyone's going to take their chips and walk from the table. Who's got the biggest pile of chips if everyone starts walking away, Joe? And here's the thing: China and the United States, they're going to end up playing ball together. They just don't want to. They just want to shift the blame away from them when their citizens have to suffer this thing. It's China's fault. No, it's Trump's fault. Yeah. Well,
right.
you just suffer.
Jay Powell's fault,
it's
right?
Jay Powell's
it's
fault.
Foreign policy decisions' fault, right? It's the banker's fault. It's somebody else's fault.
Yep.
Here was the conclusion. China needs to change. The country knows it needs to change. Everyone knows it needs to change. And we want to help it change because we need rebalancing too. Okay? So the Treasury Secretary, again, how do you do it? I don't know. Right? They don't like that the Chinese save money. They want the Chinese to spend. Obviously, I guess, right, Jason? Hey, let's just start paying everyone more in China, and then their stuff won't be so cheap anymore, right? And then we can have rebalancing. Yeah. When we get back, we'll correct my mistake from yesterday. 800-951 0592. Dow's now up 600 points as the big news. So obviously we heard from the Treasury Secretary. The headline comments sounded really good. Then you kind of listen to what he really said, and it's going to be I don't know how you get there, right? That's going to be the hard part. Then you add, right, Donald Trump, I'm not going to fire Jay Powell. So you had this feel-good thing happening. But there was a report out of the Wall Street Journal that really kind of spiked the market, saying that the White House was going to be slashing these steep tariffs on the Chinese, and in some cases by more than half. That was out of the Wall Street Journal earlier this morning. That report now is being, thrown away. Reuters is saying that that is not the case, and saying that any tariff cuts would only take place pending talks with Beijing and would not be unilateral, but in conjunction with Chinese talks. And as we know, there's no talk scheduled. So, Jason, maybe the market here got a little bit ahead of itself with it. We'll see. I think it'd be a great thing. But if you listen to what the Treasury Secretary said, I don't know how you make this happen without the tariffs, right? Because that's the only way. What essentially he's saying is, hey, we want you to build less stuff, and we want to build more stuff.
Right.
Right? And we can't build more stuff because it'll cost us too much money to build it unless you make it more expensive. So how do you make it more expensive? I guess, I don't know. They want China to pay everybody more money. I don't know, right? That's the hard part. The Chinese, like I said, this was the goal. Why did we put it all there? We put it all there because they wanted to print money and say there was no inflation. And now they're saying they want it back. I don't even know if these jobs even come here. That's the other thing, right? Why wouldn't they just go, I don't know, Vietnam, Cambodia, go somewhere else, and have it? I guess maybe the goal would be, okay, but at least it's not China that has it all. I don't know. It's an interesting thing that's playing out.
It's kind of just a dumb statement. I mean, because as you said, you make it in China, so it's cheaper to buy here, and that makes the cost of living in America go down. It's a worldwide economic system. So the tariffs are to make, hey, the tariffs show that, hey, America wants a better deal, so other countries have to pay a higher tax. I mean, if you apply this in the country, people would go nuts. If you decide, well, you know what, Colorado and Arizona, they need to pay more taxes. The rest of the states are okay, but, we're just going to make Arizona and Colorado pay more. And that's what a tariff is, But it's a worldwide economic system. If inside Colorado, you wouldn't have 5 counties pay more taxes than the other counties, right, Joe? So what as the guy was saying that you said, is like, look, we just need you to charge more so we can compete with and make stuff here. But that's ridiculous. Because the idea is the consumer is going to buy the product that's the cheapest, if you're looking at like items. So the whole thing is a whole bunch to do about nothing, because it all is going to come down to you either buy it for cheaper or you make it for cheaper. The consumer's always going to go for the item that's the cheapest. So making China, hey, China, instead of us putting a tariff on you, can you just raise your prices and take a bigger margin? And then when we make stuff, we just want to take a piece of your market. Well, these are corporations. These aren't countries. These corporations. Right. What, you want us to give you our customers? That's what the guy's asking China to give us your customers. I mean, and what is this? Is it backed by a threat, or we're going to blow something up? I mean, that's the only thing I can think of, is maybe there's some backhanded threat here. Hey, by the way, we can make life really hard for you if you just don't raise your prices so we can make it. And essentially, that's the only card that's on the table.
And listen, I love how we say it's China. It's all these corporations. That buy your. Hey, listen, it's your 401ks. It's your IRAs, right? It's Apple. It's Microsoft, right? It's all of these countries, or countries. Here I go. All of these companies that are making all this stuff. It's not China, the country, isn't making all this stuff. It's companies. And these companies are either the companies that your 401ks and IRAs are based out of, or, right, it's a company hired by the company that your 401ks and IRAs are based out of.
And that's well put, because, as I said, I think a week ago, I said, look, is Apple really an American company? Everything about the product itself is done in China. Even the ships that ship it over here are Chinese ships. It ceases to. Is it? No, it's not. It's not a Chinese product either. It's not Chinese. Joe just said it. It's not a Chinese product. It's not an American product. It's Apple. And Apple went to China, and that's their business model.
They hired Foxconn,
yep,
right, to build this stuff really cheap for us, and we get the benefit.
Right. And here's the thing. The benefit only lasts as long as the labor and the parts are cheap. And guess what? Things aren't cheap because the currency's failing. The yuan is failing. The dollar is failing. The yen is failing. I need to get the chart. I'll dig it up there. If you look at a currency chart and you have all the world's currencies in it, and you see, these layered charts. I love layered charts. Like when it's the same with energy and currency. It's the same thing. It just grows and grows and grows. If the energy ever, has a recession, if there's less energy being used, the currency has to go down with it. So I'm telling you, when you look at these currencies, they're going bigger and bigger and bigger. It doesn't matter if Apple's making it in China or if Apple's making it in America or if you're making it in Taiwan, or it doesn't matter. The price of it is going to be affected more so by the currencies floating around than what the actual cost to make the item is or where it's produced from. Yes, it's going to cost more in America because the currency is worth more here. But the China middle class is growing, Joe. They want a bigger piece of the pie, just like the gentleman we talked about. He wants a bigger piece of the pie. China, why don't you just give us your business? It's not going to happen, Joe.
We'll be back. We got our specials coming up next. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Wednesday. I guess we can say maybe a little cooling off. Nothing's changed except maybe the rhetoric, right? So we got some rhetoric change from Trump and Bassett, and people are, there's that word hope again. But when I read what we want, it's simple. This can get done. It can. It's going to be expensive. Things are going to get more expensive. But it can get done if this is truly what we want. Now, if we just want to move the trade out of China to some other country, well, I guess we could do that, and maybe things won't be as bad, but we'll have to wait and see. So yesterday, we ran the Platinum credit card. The Platinum credit card is 51-gram platinum bars. Each one's got it's stamped. It's super cool.
A breakable bar. It's a breakable bar.
Breakable, right? You can break them. You can, and anyway, here's 1 gram. Here's 10 grams. Here's 5 grams. I did bad math. So yesterday I was telling you it was 1.8 and change, ounces in that. It's actually 1.76, so I apologize. I was trying to do it I don't know why I was doing it in my head. That's just, I got a calculator.
31.1 grams in an ounce. Doesn't matter. It's same thing as when your dad tricks you. Hey, what's heavier, a pound of steel or a pound of feathers? Well, yeah. Neither. It's both a pound.
Yeah, so they're both a pound, yeah.
31.1.
And technically it's 1.7636. 9, 8, what, one of those deals. So we had them at $2,000, which, by the way, that's a great price. But I wanted it to be the same as what the 10th ounce were, which would have meant they had to be like $1,935. So here's what I'm going to do. This is what I did yesterday for everyone that bought them yesterday. Because we sold 5 of them yesterday. We got 20 of these still left. We're going to go down to $1,900 for what I'm calling the Platinum 1 gram credit card, 50 grams of platinum, another 1.763 ounces of platinum. They're going to be $1,900. And like I said, we've got 20. If we don't, and by the way, that takes you down to $1,077. And so essentially you're buying this by the gram for $100 over the spot price, which is dirt cheap, right? Dirt cheap. You don't buy 1 ounce bars for $100 over. So take advantage of those. They're $1,900. We have 20 of them left. Whatever's left after today, so you got through today, I will break the credit cards apart. And then you can just start buying the individual grams. So because I get it. Some of you are like, gosh, I didn't have 2,000. I don't have 1,900, but I sure would like to get some. If we've got any of these left tomorrow, we'll break them open on the gold side.
Oh, hang on one second, Joe. So
go ahead, Jason. Yeah.
The platinum spot price is currently $990, so you're getting it for about $80 over spot. So platinum is starting to move, so we won't be selling. And I wouldn't wait for the 1 gram breaks. I didn't think we would blow out the 10th ounce as well as we did yesterday. So if
we had 710th ounce when we went on the air on Monday. We sold them all before we made it on the air yesterday.
Correct. So I wouldn't wait for the 1 gram breaks. Don't. If you got the 1,900, and I told you I thought we should go a little higher than the 1,900. So Joe wants to go ahead and get these into your hands, and you're about $80 over spot because platinum's going up. Gold is moving down, so the audience that buys gold, silver from Patriot has been reaping the benefits of listening to the show, and I would continue to listen and take advantage because we nailed it this week. We'll brag this time. We nailed it this week. The platinum on Monday and Tuesday, finishing it today with the same prices, Platinum's moved up about $15 an ounce, and gold's down over $200. I mean, gold hit 3,500 overnight Monday night, Tuesday morning. And so it's going to be time to, after this platinum sold, get gold.
Right. And when we look at it, right, gold hit 35. It was overnight. We weren't here. By the time it opened up, it was 3,400. But gold, listen, gold's down $94. 32.86 right now. Just to give you an idea, $20 gold pieces today, $3,500. Yesterday, there were 3,675. So big discounts here. You're saving a ton of money. And again, essentially, hey, gold's already hit $3,500 this year once. It's going to do it again and probably go a lot higher than that. 800-951-0592. The platinum credit card, it's 50 grams or 1.763, blah, 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 ounces of platinum. And guess what? I'm going to do them for even less than you could get the 10th ounce for at $1,900. And then $20 gold at $3,500. If you want to do some volume, you want to come in and do a couple hundred, 300, 400, 500,000, $1 million, call me and we'll get really cheap. We'll be back right after this. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Wednesday. And we've got a pullback in the gold markets, a rally in the industrial metals markets, platinum, silver, palladium, you name it. The platinum credit card on sale today, $1,900. Get you the breakable 51-gram platinum credit card. That's even less than what we were doing. The 10,000. And the best part is platinum's gone up. Listen, this is a play where, quite honestly, whenever the trade war ends, is it a month? Probably not. But 3 months from now, 6 months from now, I think you're going to see what we'll call the industrial metals roaring here. So jump in while platinum's still below the $1,000 an ounce level at the $1,900. Mix them into your portfolio. Be more diverse inside of it. And then, of course, the $20 gold pieces down to $3,500. And I'll do this. Tell you what, you do 25 or more, we'll take it down to $3,475 at 800-951-0592. Buy these. We know how these gold pullbacks work, Jason. They're fast and they don't last. That's the thing. Before you can kind of wait. Well, maybe it'll go down some more, right? And then what happens? Boom. Right? And who knows? We have no idea what the next headline's going to be. Depending on what the next headline's going to be, you turn around tomorrow and gold's up $100.
It's lightning fast moves. Moves that were $10 or $15 moves, $20 moves that would be fast in the past are now $100 moves and $80 moves. So gold. Joe and I didn't know. Yeah. We thought possible Tuesday morning we were coming in and gold was going to be way over $3,500 possibly, or stay way up. Just from Tuesday morning to here we are Wednesday morning, just over 24 hours, let's say 28, 30 hours, gold dropped over $200. And the way gold's been moving the last 18 months, this is what they call a buying opportunity, Joe. When it keeps moving for months and months and months on an upward trajectory in a way that I've never seen since I watched gold. This is a great way to get in. The platinum is also a great way to get in because let's say gold ends up at $4,000 at the end of the year. At some point when these industrial metals like silver and platinum start to move, they'll catch up, and platinum could actually go all the way back to the gold price. And can you imagine buying platinum at $1,000 and getting it to $4,000? Let's just say 2026, Joe. It could very well happen. The inflation that's coming could force copper, force silver, force platinum right back up there, and that means platinum goes back to gold. I mean, it's not as crazy as rhodium, but these things are starting to move more like the gold's starting to move like it's a little bit more like rhodium, isn't it, Joe?
Well, what's funny is we talked about, hey, all these gold moves on the upside. Same with the down. This would have been like, oh my gosh, what a horrible day in gold. Look, it's getting hammered. You know what all those things is? Oh, profit taking on gold. Don't worry. Get ready for the next level. 800-951-0592.